down 1.4% today. Yesterday we were up 0.25%. What's going on in terms of volumes?
Really, we are seeing a lot of sellers in the market, as you can see from your screens over there.
Yeah.
Markets fallen 1.4% today, driven by the banking sector mainly. We saw offers in GTB as well as First Bank. Really, the banking sector really has
and even in Europe, it seems today, David, that the banking sector was topic of conversation, given the fact that the governor, Lemido Sanusi, was talking about various suitors for some of the troubled banks, but did allude to the fact that we are not going to be giving banks away for nothing. This should have added a little bit of positive sentiment, but clearly we are still seeing a lot of problems that need to be filtered through when it comes to banks.
A lot of people are sitting on the sidelines and waiting to see a positive response from the CBN in terms of actually highlighting, bringing up buyers, or in terms of what we'll call zeroizing the shareholders' funds of these banks, how that would play out, who would pay for it, how will we pay for it. So we expect that once those are ironed out, we should see positive sentiments in the market.
Well, just taking a look at some of the talk coming through from Nigeria, some say that the selling by banks that decided to divest proprietary positions and from non-core banking business instead of embarrassing the holding company structure. Do you think that that is a fair play when it comes to investment in the banking sector?
We reckon that some of that news is not new news, so some of it must have been discounted already. In our opinion, we don't believe that is as a result of selling of proprietary positions. We think really it still goes back to political issues, it goes back to the AMCON and policy issues, not really selling of that were divesting from companies.
Well, David, a lot of people are focusing on the recapitalization of the rescued banks and the political risk and also AMCON. What other factors are weighing on the market right now? Would you say this is the biggest point in terms of investor sentiment?
Number one, as I said earlier, would be zeroizing the books of these bad banks. Who are the buyers? You know, when will M&A actions actually kick in? You know, those are factors that people are considering at the moment.
David, in terms of the non-core banking businesses, how much of that is contributing to the bottom line of banks?
Well, pre-March 2008, I would say probably between 15 and 20%. Obviously, that would depend on the bank. Some banks are more investment banking focused, Stanbic included, FCMB, First Bank, with strong franchises in capital market operations. Now, I would say those numbers are probably less than 5% on average, and that's because a lot of the IPO or issuing house business or proprietary trading business has actually been non-performing. Haven't done very well in the last couple of years.